Hello and welcome, my name is James Preston and today I'm sitting down with Chief Investment Officer of Peak Investment Partners, Ian Wenham, to get a brief update about the market. Ian, markets have been very volatile over the last few months. What's driving this?
Well, unlike the GFC in 2008-2009, it feels more like the political situation this time is one of the primary factors. If we look at recent history, we've had Brexit, which was an event where the expectation was completely opposite from what the outcome was. In the case of the Australian election, we've seen, again, an outcome which was not completely expected. And perhaps looking forward, this is likely to continue. I mean, clearly the US presidential election is something that, as we go towards November, is bound to create periods of volatility in markets.
What's been the specific market reaction to these events?
What we've seen has been an initial reaction post-Brexit, which was quite extreme, where equity markets fell significantly and bond markets rallied aggressively. However, over the last 2-3 weeks, what we've seen is a complete reversal of that, where bond yields have actually risen and equity markets have been remarkably strong, to the extent where we've just gone through a period where the Dow has risen 9 days in a row, which is a pretty rare event for that to happen. And of course, even in Australia, we've seen a strong rally where our market is back around the 5,500 area, a level we haven't seen in over a year. So it's been initially quite a negative, and then markets, as I said, have recovered perhaps more than we would have expected.
What are going to be the key drivers for the equity markets for the balance of the year?
A number of things. I think one, politics will clearly remain a factor. Secondly, we are quite constructive around the trends in earnings growth for the balance of this year. The US has had 5 down quarters in a row. We think that we're now going to have at least 2 up quarters for the remainder of this calendar year. Australia, similar story. We're looking at reasonably solid growth from our industrial stocks in the sort of 5 to 10% range, and again quite a significant recovery in the resources sector on the back of somewhat better commodity prices. The third factor is we're expecting to see fiscal stimulation in places like Japan, most probably in the United States post-election, certainly in the UK, and even in Australia through increasing spending on infrastructure. So that should support markets as well.
Ian, in this uncertain world, how is Peak structuring portfolios to protect and enhance their clients' wealth? And what are some of the thematics influencing your thinking?
Overall, we remain cautious. Our key basis of portfolio structuring at this point is a combination of dividend yield plus growth. And with respect to sectors, we remain overweight infrastructure, which gives us a very good combination of growth plus income. Another opportunity that we remain positive about is in the small company space. We are seeing a number of very attractive investment opportunities which we think will provide investors with significant growth in the coming years. We remain positive on the healthcare sector, particularly in the post-election environment, where clearly politicians will be reluctant to meddle with the healthcare system. Thirdly, we remain very positive around the emerging Chinese middle class and the opportunities that that's giving a number of our companies and sectors. And finally, we remain very positive around a number of technology-related opportunities.
Where do you expect the Australian market to be at by the end of the calendar year?
Personally, I think we could see the market trade possibly higher than where it is today. We think that if it pushes through the 55-50 area, it could easily end the year at 5750 sort of range. So in other words, it'll finish the year stronger than where it is today.
Ian, thank you very much for sitting down with me and giving your current thoughts on the market and for the prospects for the rest of the year. All the best of luck with Peak moving forward.
Thanks, James.